right, what's going on, everybody? Chris Franks with TexasWest Capital. As always, I got my friends Tillman and Andrew sitting in the wings, waiting to just blow your minds when it comes to Bitcoin, or at least piss you off. Usually, we can manage to do the latter at least. And then Tillman sweeps in to save the day with some crazy analogy that he has. He's our analogy man. Andrew says he's full of piss and vinegar today. We'll find out. But hey, listen, we've got lots of stuff to talk about today. Two main things I kind of want to reach and kind of discuss are Lowry, and he's the guy that wrote Software about Bitcoin as a strategic defense mechanism, and this idea that the DoD may be already mining Bitcoin, as well as we've just now hit the longest contraction of the Global Liquidity Index in Bitcoin's history. And so we'll touch on it a bit here. And I know Andrew's got some stuff he'd like to talk about as well from the world of TradFi. So, and Bitcoin and all that fun stuff. So anyway, make sure you hit the like, hit the thumbs up, share the links, folks. Come on. It takes 2 seconds to do it. We really appreciate it. Get the people out there listening in. And man, oh man, here we go. I hope you're ready. So we're going to pull up Tillman as he's drinking some coffee there. It looked like out of a hand grenade, but maybe I just kind of
the Black Rifle Coffee Company mug.
We are not sponsored by them, folks. That is not an advertising plug for them.
Hey, anybody who sells coffee out there, I'll drink it. Send it to me and I'll promote it. I love a cup of Joe. I drink probably 6 or 7 cups a day, I would say.
Oh man, I see. I don't. You guys, I know Andrew likes his. I swear to God, it looks like espresso or cappuccino or something. He's got some really.
Oh yeah, I've got some absolutely ridiculous machine that, to be fair and full transparency, I have absolutely no idea how to use.
Well, in the instruction manual on the machine, it says you have to drink it with your pinky up. That's how expensive that machine is.
Well, now on the show said this.
Listen, my fiance knows how to use it. She's an absolute crack at using it. She's fantastic, but.
Shocker. She probably read the manual, and I know what you're doing.
Also, to her credit, she absolutely will not see this. And this is a good thing. So she used. I also have.
You're not a KOL to her yet.
I have not at all. Zero KOLness. So I also have, just as bougie, a mixer, right? Like I've got a mixer that's super high end. And she used it yesterday to make the best chocolate chip cookies in the history of mankind. I ate so many that this morning I woke up and I was not feeling well. The sugar had overtaken the entirety of my existence. So, but yeah, that's her domain.
Well, unlike these two gentlemen here, I don't drink coffee, so.
What?
Yeah, I know, right? How do I make it through life?
You know why he doesn't, Andrew?
Why?
You know why?
Why?
Because coffee's for closers, baby.
Yeah.
I just, it's odd. I've just never really. My dad was, a multi-pot a day black coffee, nothing in it. If it wasn't black coffee, it wasn't coffee to him. Old Navy guy. Navy.
Well, he was probably a big, there was a rapper that made a song, Black Coffee, No Sugar, No Cream, right? Now, I don't know if that had more to do with the culture and dating in the black scene.
I've never even heard that song.
Or was it just about coffee? I don't know. It feels to me like it maybe had more to do with the culture.
How was the whitest guy on this show actually saying that? I just know I don't get it.
Black coffee, no sugar, no cream. You gotta look it up, man. You gotta look it up. It's good.
This is horrible. This is taking a bad turn.
Hey, Bernardo says he drinks fancy coffee. He says.
That's right. That's right.
Hey, I drink fancy coffee, but it's black. If you drink 5 or 6 cups a day, if you put anything in it, you gain too much. It's not good for you. It's too much sugar.
Well, okay, guys. So now that we got the coffee out of the way, real quick here, I guess we'll start off with this idea that Jamie Coutts, I can never say his name right, Coutts, online there, he says that we have right now marked the longest contraction of the Global Liquidity Index in Bitcoin's history, 3 years and counting, measured from the peak. So previous tightening episodes, he says, 2014 to 2016, which we know what happened after that. And then 2018 to 2019. These are bear market things, right? Which lasted, just under 2 years. So he says, how much longer will this go on? Surgical cuts from Doge aside, the structural deficit remains unchanged. So how can the U.S. government or any heavily indebted Western nation with a, which he refers to as a debt to GDP greater than 100%, so most of them, and especially China, the most indebted, refinance if nominal GDP is falling behind interest expenses? So he says the fiat fractional reserve debt-based system will implode without liquidity injections. The spice must flow. So what I found most interesting from that was that the two previous ones he talks about were bear market things, right? 2014, 2016 was the bear market there. Right before I came in January of 2017, and we went, woo,
Well, is that a real long-winded way to say that they're going to keep printing money?
I think that's what he's trying to say. I think he's saying, listen, how the hell else do we do this? So they have to print money.
But I don't understand why people act surprised about that notion.
Yeah.
That is our economy. We created it by design to print money into infinity and debase the currency against our growth potential. And at the end of the day, really, it's about who has all the guns and who has the most guns that are on the same side. And, this whole notion that somebody is going to call us down on our debt is crazy to me. People have been saying that since I was a young boy. Gold bugs have been saying that you can't keep the manipulation up as long as it's been going on. I don't think that they understand that that's literally how our economy is supposed to operate. Now, we're looking at a segment that compared to the previous segment looks parabolic. But that's only because we're in that phase. It doesn't mean it's going to stay parabolic. And like our growth potential from an AI perspective, from all of the companies and industries and creations within the US and what that potential holds, that's a lot of money that we can inflate. That's growth. Like the rest, 7 billion people on the planet, and half of them haven't been commercially extracted yet. There's a lot of growth potential to the world's GDP. And guess what? We're the world reserve currency. We're the leading economy. We're the largest consumer. That puts us in the driver's seat of that game for a long, long time. That's like sitting at the end of a Monopoly game and going, this is going to end soon because that guy has all the money. No, it's designed to last hours and hours and hours.
So 2 responses to that tweet or whatever it was. One, this hat looks really good on me. I'm going to wear it a lot more. I was unaware how good this would look.
It does. It matches your gray beard perfectly.
It does. It's really strong. So that being said, the Federal Reserve literally exists to print money. And their only sort of directive is how fast or how slow are they printing money. That's it. That is the entirety. If you wanted to use 2 sentences to describe the Federal Reserve, how fast do they print money or how slow do they print money? That is the entirety. Monetary policy, right? That is the entirety of their existence. So the idea that printing money is some newfangled part of the commentary that we need to adjust expectations to. No, it's just a question of the pace and speed of that money printing. And sometimes it's slow, really slow, and sometimes it's fairly significant, right? And so, I think, that commentary is, while it sounds high-minded, it's just obvious. And it to me, the
well,
thing
it's this obvious. If Chris, in your house, you've got bills to pay, right?
No, it just
Yeah.
happens.
If you had a little magic money machine in your back room that you were allowed to go turn on whenever you wanted and print your way out of whatever bill you wanted to create, what would your lifestyle look like? And when would you stop using that magic printer money?
Exactly.
That's
Yeah.
like, it's human nature. It's impossible.
Well, yeah, and you know, and we've talked about it times before on here, and it's something I always talk about, which is the fact that, you know, Western societies are, Western governments are, they're all debt based these days.
Every one of them.
They're all debt based, and if they're debt based, that means they have to have inflation. They have to continue to print money. And to Andrew's point, it's just how fast or how slow do you print it, right? We get upset when inflation jumps up like it did last few years. But generally speaking, you know, everything else kind of held more or less equal. If you're getting that, you know, 2% or whatever a year, you should be able to keep up with it.
I don't even look at it as we're debt based. A lot of people say that. I went to University of Texas. They taught that in the economic school, that we're a debt based society. I disagree with that, because that's only one side of the curve. We're an interest based economy. We like to chase yield, and we sometimes borrow money to do it. That is what our economy is based upon, is us as a people going, you know what? This money is worth so much to me in opportunity cost right now that I'm willing to sign away my rights and put collateral up and pay interest and go through the headache of the paperwork. Why? Because I think there's a pot of gold at the end of the rainbow that's better than what I'm signing up for right now. That's what keeps the ingenuity going, is that, you know, if you just see a distressed piece of property on the corner in, you know, Aspen, Colorado, selling for $1.2 million, guess what? You should probably go get a loan and buy it, even if you're not capable of coming up with $1.2 million. Why? Well, because it's worth a hell of a lot more than $1.2 million. So, you know, the whole thing about debt is, yes, we do consume a lot and we do go in debt for that consumption. That's a different debt, though, than really the debt that drives the market, which is borrowing rates and how much money you're willing to go out. How big a house are you willing to extend yourself to go buy on the back of your salary? That's all about interest rates, right?
Yeah. And you know, definitely, you know, what you're saying, I agree with that. My point being just that because we do have debt, it necessitates continued printing of money, because you want to pay for current debt with cheaper future dollars. And
Absolutely.
you get into an issue when you have to pay for current debt with current dollars, or worse yet, with more expensive dollars in the future.
Well, if you understand that premise, what you just said, you understand that it's not a rock and a hard place. It's a death nail. You can't go deflationary in an economy that has a bunch of debt. You can't do it, because now you're making the debt insurmountably. You can't pay it back, and so everybody busts, or at least if there's a high water line of busts.
So another, you know, I know this is beards and Bitcoin, but for another 90 seconds, it's going to be beards and fashion, because this hat, okay, it also makes me a little taller too. And in my period of life, when you're a little taller, you're also a little slimmer. So what this hat is doing, there's a lot. There's really just, you know, yeah.
You really took my narcissist comment a couple of weeks ago to heart.
I took it to heart. I did. You know, this is, I have sort of eschewed this version of hats from this brand, but I'm going all in now. I like it.
Andrew's Fashion Corner coming next week.
Yeah, that's
there
right.
will be a day in the afterlife where you get to see what we see, and you won't be as enamored as you are right now.
Yes.
Man.
I will say, you know, there are some things out there that have, you know, continued. We've said this many times on this show, that there can be a year's worth of announcements in a week or even in a day associated with the industry now, whether it's Bitcoin or others. And I hesitate to bring this up, but I have to. You know, again, the SEC, you know, just closes out the Ripple case. You know, it's done, dismisses it, it's gone. It's hard to, and most people in the space
Does that make them liable to all the people that had to sell in liquidity
Well,
crises?
hey, let's not derail this conversation, okay? Let's not derail the conversation with personal animus, right? So it is, again, it remains an extraordinary moment in crypto where we have agencies that are sort of defaulting to, we want the industry to grow and we want the industry to grow fast. So we're willing to overlook some of the concerns, securities, not securities. Let's just open the floodgates as wide as possible and let, retail folks figure it out. Like retail, you figure, if you want to own it, own it. If you don't want to own it, don't own it. But we want people to build. We want folks to make decisions and have opportunity. And that couldn't be more clear with, essentially 86ing the Ripple case.
I don't disagree with that, but I will tell you that it's come at a cost, right? And that cost has to be acknowledged. There's a lot of companies that went out of business.
Well, maybe you did disagree with it.
Well, I mean, I disagree in the fact that progress is going to happen in our space. It's inevitable because the technology is that disruptive. Regulators have really hurt a lot of people over the last, I'd say, 8 years in the crypto space. And, to get everyone that's been hurt to get excited about the same old cryptocurrencies that still have the problems that are like, I just don't see the whole Ripple thing as being anything more than a headline that pumps it by 13% in a day. I don't see it as being meaningful for the industry. I think this is just essentially another regime change, and the next regime could come out and say XRP and everything's a security, and it's just a whipsaw event. And I just want to root for technology, because technology and the decentralization of people managing that technology is what I'm here for. And XRP is not that. They still are centralized. They still have a company that's running the organization. And to think that the SEC is turning a blind eye to the clear offering of an unregistered security just in the name of innovation, I'm not for it. I'm not sitting here saying that that every project is as guilty as Ripple is, but if you read the case, like they were selling huge chunks of XRP to other large whales and large influential high net worth people, and those people were then dumping it on the public. And if you issue that from the start and you issue it as a meme coin and everyone knows it's a game of musical chairs, that's one thing. But when you have a centralized effort of marketing that's telling everyone that they've signed this agreement, that they're in 100 plus banks are using them for internal transfer purposes, that they have a co-patent with Bank of America, all that stuff, enticed a lot of people into the camp, only to get absolutely decimated. And so for the SEC to now come out and go, oops, my bad, we were wrong, a dollar late, a day late, and a dollar short, and as far as I'm concerned, it's tainted that entire project. And I don't look at Brad and the whole organization the same, because we got to read all the dirty laundry, and
But if he put this hat on, he'd look, it would really make things.
He'd be able to sell some more XRP.
It would change your mind, I think, just a little bit. Now, to be fair, there's some personal disclosures here, which I won't get in, that causes Tillman to be a little bit passionate about this particular issue.
No, I was a big XRP believer, and I did own XRP when they were sued by the SEC. And it was a catastrophic event. And what was horrible about it was that if you were in the industry and you were looking at all the horses to pick, and you were picking those horses based upon which ones were working with the regulators the closest, You're picking Ripple and XRP. And
So
they were the ones that got.
Here's my quick question. Do you think that XRP goes from $3 in 2017 down to 28 to 50 cents in the bear market, just free markets, or was that a complete and absolute function of the lawsuit?
I don't think it had anything to do with the lawsuit. I think it had to do with the exchanges delisting it. When people realize that they can't sell their stuff, that is what got me off my XRP. It's like, you're at the mercy of the off ramps.
Now, here's the thing about that. Now, back when this all happened and the exchanges started, being like, okay, delisting it, it was one of these shows out here that did my Friday show or whatever it was at the time. And I said, listen, here's what's going to happen. And anybody that was following back then knows this is what I said. But I said, here's what's going to happen. They're going to get into there. And at the end of the day, it's not going to be about a win or lose, where basically they're going to settle the lawsuit. And then the brokers, the exchanges would start listing it back on there again. It's not often that I get to say such really great, poignant things at the time that turn out to be true. So I'm going to kind of pat myself on the back there a little bit, but
there was a confluence of events that took place right before the lawsuit that a lot of people don't know about it, that were kind of nuanced. One being that there was a major sub project of XRP called Flare that was literally partnering with XRP. Ripple had funded their seed money to develop this platform, and it was very unique. And they were advertising together, both Ripple and the Flare company, that there was an airdrop for 1-to-1 on XRP holdings. So for months before the lawsuit, you had people buying disproportionate amounts of XRP to qualify for the airdrop on that specific date. And the lawsuit literally all of that happened in the end of the year, right? I think it was 2020. I can't remember, but it basically, half of that month when all this was going down, markets weren't even open. You couldn't, it was holidays. And I think, if my memory serves me, a lot of the delistings of like Coinbase, XRP and stuff happened right at Christmas, while people were at home and everything else was closed, and so the whole thing reeks. And so how can you build a future on the back of a bunch of dead bodies, is the way I look at it.
Listen, I know that Tillman wants to tear me down about the hat, but I'm getting messages now that say that the hat rocks, right? The hat does rock, right? People sending me pictures. I can't
listen. I don't want to give you compliments on the hat, because that hat company I found 5 years ago, and you stole my signature brand and started copying it as your own. So I don't care how good it looks on you, it sucks. So
let's talk about the actual name of the show, Bitcoin now.
Yeah.
Nice. We had a conversation yesterday with old Mark Yusko, and some of his comments were, I thought, fairly enlightened, in that his idea that we're probably in crypto fall right now, that we're going to get another push higher, probably to new all-time highs, but that may be a bit short-lived. And I've said on this show for, I don't know, 8 months now, or however long we've been doing the show, 6 months, that it was nearly impossible to find a downside narrative for Bitcoin, right? That still remains the case, but during those 6 months, there were a ton of upside catalysts, right? Bitcoin ETFs, SBR, the new administration, who's going to win the election, the difference in the two regimes, all that stuff. Well, all that stuff has happened. Yeah. Literally all that stuff has happened. So while there's not huge, meaningful downside narratives still for Bitcoin, we're a little bit searching around for significant upside narratives now.
I think this is all a shift in price driver. I think price driver up until this point in Bitcoin's history has been spot. And I think it's all leveraged now. I think you've got such big leveraged instruments on the futures markets and on the options and on, like look at this whale that everybody's talking about on Twitter, where, I don't know how much, I didn't do the math, but how massive leverage position, 40 to 1 or 40x. Is that what it was?
Yeah. He did something like eventually like 10 to 12 million of his own.
So that is a giant chunk of cheese on the board that everybody that has money gets to look at. And you saw the whales all kind of try to push him past his liquidation point and margin call point, but he added another 6 million in capital to offset. And so he's playing this massive leverage game. Well, if he's playing it, lots of other people are playing it. And I think all of the volatility that we're going to see going forward in the price of Bitcoin is about where the highest leveraged capital is. Where's the most amount of capital that has the highest leverage on it? And let's move the price against that point so that we can create supply that doesn't exist for us to gobble up.
Yeah, there'll be a moment, as Jeff Park has talked about, and he even wrote a white paper on it, posted it to Twitter a while back. There'll be a gamma squeeze at some point associated with Bitcoin options. That will happen. It will push the price parabolic. To what level it'll go parabolic, I don't know. We'll find out. But then there's the downside narrative too. That is the same. It's the same concept. There's a push to the downside that will happen at some point associated.
Yeah, but let's talk about that. Like every human being that I've ever talked to, if you ask them what's the most bearish number you could think of for Bitcoin, no one's below 50K. Nobody. Like I mean, maybe there's people out there, but let's just say it's 30K, right? From where we sit right now. So what? We're down 60+%. The upside is like based upon everyone's mindset and estimates are 4x, 6x, 7x. So, the risk reward ratio at these price levels to me is very compelling, especially if you could catch a wave on margin, if you could borrow against that.
Well, again, a reminder, and we're a ways off from this because the let's just call it the derivatives markets for Bitcoin, whether it's options, whether it's swaps, whether it's bonds that end up being associated with Bitcoin, all those things, those will mature over a period of years. But, just a reminder for people that have been around traditional markets for a while, we had a moment, a couple days, where the price of a barrel of oil was like negative $31. Like crazy. That actually happened, right? That was a real thing.
Can I explain that? Because I've talked to a lot of people who have no idea what that even means.
Yeah, go ahead and explain it.
It means that there's only so much surface capacity on the face of the earth. And you can only store so much oil because there's only so many jugs to store it in. And the people who own all those jugs can fill them all up and they don't need any more oil. Their reserves are full. So the people producing the oil, if they don't own their own storage, they have nowhere to put it. And it's an environmental hazard without a home. And so you have to pay people to take it. It goes from being an asset to a liability, no different than a well that's only producing 1 barrel a day, and you have to go plug it up and do a bunch of costly shutdown because they don't want that 1 barrel spewing out on the desert floor every day. It's the negative price association was the fact that liability you would have to pay to dispose of. And if you own tanks and there was a shortage of tank storage, that storage became very valuable, no different than, a self-storage unit in a city that doesn't have any or doesn't have any available, right?
Yeah. And so let me expand a little bit more here for people that don't know and maybe weren't following me at the time because I'm from West Texas. So I gave a big old drawdown what was going on there. And so what happened, this was right after COVID hit, and the biggest contracts, for oil are usually from airlines and cruise ships and whatnot. And since they got the shutdown, they were like, well, we don't want these. We don't need these. And what happens is, so you've got West Texas Intermediate, which is what we do here in the U.S., and then you've got Brent C crude oil, which is what you do, elsewhere. Now, Brent, you can accept at the end of the contract, you can either accept the oil or you can accept the dollar value of that. With WTI, you have to accept the oil. Now, for those that don't understand, the oil in the U.S. is actually run through pipelines. Cushing, Oklahoma is the major hub, and that's where you basically have your storage. Now, what happens is at this time, everything coming together, worldwide oil storage was at something like 80 or 85% when this happened. U.S. oil storage was completely full, as we were just saying there a minute ago. Cushing was completely full. They had nowhere to put whatever. And what I said at the time was, I said, listen, we're getting down to like $40, negative $40 a barrel. I said, here's what's going to happen. Some young enterprising people are going to find somewhere in the world some oil tankers that they can get. And they're going to take these contracts because they're getting paid $40 or $30 or whatever a barrel of oil. And they're going to take that money and they're going to use it to transport the oil to the tankers and then set the tankers out for 8 to 12 months. And then they're going to bring it back in, and it is all profit. It's all basically infinite profit from this. And that is exactly what happened. A few people were able to figure that out. They were able to find the few tankers.
Well, and the Texas Railroad Commission, and then giving the lottery system as it pertains to the pipeline capacity. That pipeline capacity, you could play arbitrage and make a lot of money, essentially selling your capacity if you had the storage facilities to take your oil and store it instead of putting it in the pipe. Yeah, but to Andrew's point, markets can go crazy, and when you look at Bitcoin and the nature of it having a fixed supply, it's inevitable that event will take place. The question is where does it happen on the adoption curve, and are you in it? I do think that there will be, especially now that there's so much paper money being traded in Bitcoin, and the larger that number gets, the harder it is to settle the price between the spot and the paper, and that can get crazy pretty quickly. It's no different than silver markets. If you made a large purchase of silver on the COMEX market and you demanded delivery of it, if enough people did that, there is not enough silver for the delivery, and price goes parabolic. Now, they control that very closely, and you like the Hunt brothers did, get a knock on your door if you try to make that happen. But Bitcoin, they can't shut off the on-chain transactions. So that demand just keeps building on-chain, and when the markets open, they have to respond to that on-chain demand. So I think if we see a gamma squeeze, large nation state come online and say they're going to buy a bunch, or a race by a bunch of corporations to kind of get it on their balance sheet, we could see a squeeze that, makes any squeeze that we've seen in the past look like child's play because of the limited nature of Bitcoin, because it's a fixed supply. That's where the rocket fuel comes from.
Well, I have not looked this up, and I take what I say here with a grain of salt, but my guess is that Bitcoin futures have seen more volume over the last 6 months than they did in the first 12 months that they existed, right?
They have.
Because, so there's already a little bit of a percolating happening associated with paper Bitcoin. We already know that there is a significant trade between spot Bitcoin as it stands now and paper Bitcoin, which is Bitcoin futures. That there's a lot going on there.
Yeah, the heaviest hitters that I've talked to that like that play short, they use the spot market to short the piss out of Bitcoin because they can do it on high leverage.
Right.
And then they go long in the futures because there's always a premium and it's always speculative up. And so there's a natural spread there with volatility that occurs that allows,
So
you know,
it probably makes some sense to really study the GameStop moment from 3 years ago and study the reality associated with options and the fact that you moved from $2 to $25 over a 6-month period. And then you went from 25 to 80 in about 2 weeks.
Yeah.
And then you moved from 80 to 400 plus inside of about 4 days. And then 400, and then you were back down to 180 in 18 hours. And then after the next 18 hours, you move back up to 300. At some point, again, it's my belief that that level of price action, there will be a moment where in the future where Bitcoin will happen with Bitcoin.
Well, that's just because of the organized effort of the buying that went on. Like if you look at price increases, if I put all of the orders of the GameStop retail investors and I put them all together in one lump sum and I put it on the market right now, it would not nearly have the effect on price that having those same retail people take every one of their paychecks and piling it into the price wherever it is on the price appreciation curve, chasing it to infinity because they believe in the movement. Bitcoin has that same potential. And I do think that there is a race, but I think that the difference is it's kind of like the meme coin mania. If people are buying the meme coin just so that they can feel a part of the community, they do not care what the price is when they buy it. They're not buying it for the appreciation potential. They may be thinking they are, but their actions are proving otherwise. I would venture to guess that the cumulative volume of that GameStop, buy was relatively small. It was about an amount of money that Citadel could have easily covered if it came in one chunk. But the fact that they just kept dripping it for months and months, every day the buy pressure was just mounting and mounting. The movement was growing. I think that's where the magic happens because
and let's be honest, nobody expected what happened, right? Least of all Citadel. Citadel thought it was a joke, right? They were like, oh, these little retail idiots, we're going to crush them. And so even from that standpoint, potentially could have positioned themselves much better had they taken it seriously. But we hadn't really seen something like that happen. It was the product, the whole COVID and everybody sitting at home bored off their butts and all of a sudden options. And
well, again, with that story, Citadel didn't have any trouble. Citadel made huge amounts of money, one on the volume and two by loaning money to Melvin Capital and some other hedge funds that needed to cover positions, right? So they made out like a bandit. It was, the big hedge funds that were short that had real Melvin Capital doesn't exist anymore. It shut down. So, but again, I love the movie Dumb Money. I probably watch it every month. Simply because it is just a truly unique market story where retail found a way to just slightly educate themselves on the upside potential associated with options, right? And it's one of the points that Jeff Park makes so often now. We are at a point where the gamification of markets is that's the way that things work now. And so people are coming into markets and not saying, well, I'm going to put 7% of my paycheck into my 401k forever, and that's how I'm going to build wealth. They come into the markets like, where's the lever that I can pull where I've got a 10-to-1 chance?
Well, they figured out a hack to the markets, in my opinion, because here's the hack, right? If you get a bunch of retail people to focus on getting something to a market cap, right? Look at the meme coin space. What does everybody that launches a meme coin do? They go, let's get this to $1. Let's get this to 50 cents. Let's get this to Donald Trump's coin got to a $75 billion market cap. Now, what does that mean? It doesn't mean there's $75 billion there. Right. It doesn't even mean there's $500 million there. It means that a bunch of people were willing to buy it at a very bad price. That's all it means. And so the more you can support that continued buying, the longer you can stay there. But the inevitable crash is that the pockets that typically don't care what price they're buying at are very shallow pockets. And so you run out of money in those crowd efforts at a certain point where unless they're playing on huge leverage, and even then there's an end to that story that they can't compete with. And so you look at this GameStop thing is I think the reason why it got up as high as it did is because somebody who bought one share at $400 really didn't care. It's only $400. They felt like they were going, they were a part of the community, and they weren't sitting there going, you know what, if I lose this 400, it's the end of the world. They were thinking, oh, this is play money. And look, I get to show all my friends that I bought at 400. I'm supporting the effort. Bitcoin has, again, that potential, and I think we will see it. It's just a question of when. When does it happen?
Yeah. And I think, again, it was this first time we'd really seen something like that happen. And so that's, what ended up doing like Melvin Capital and others, because again, like everybody else, they just really didn't take it seriously. But since it's proven itself now, here's my thought is that I don't believe we're going to get that same kind of effort anytime in the future. When we see something like that happen, I think it's going to be created by the other side. It's not going to be a true retail thing. They're going to make retail think it is. They're going to make retail think, oh my God, look, the same thing that happened with the meme stocks back during COVID. Look, it's still happening now. But I think these big hedge funds, these big, companies with this size that can direct this, I think it's going to become this social media thing where they're going to use that social media the same way, but to make retail think.
Well, isn't that what MicroStrategy is? I would argue that MicroStrategy is doing the exact same thing, because there are fanboys of MicroStrategy that are copying and imitating their hero, Michael Saylor. What is Michael Saylor's opinion? But I buy the tops.
Yeah.
They don't even understand what that means, but it's a genius thing to say when you want retail to come in alongside you buying the tops. They don't have the advantage of understanding that when the tops are in, MicroStrategy share price is the most valuable, which allows them to borrow against it and get the most amount of cash extraction, which allows them to then put it in Bitcoin. And that's why they buy the tops. It's not because he's going, by God, Bitcoin is such a good asset that we're only going to buy the tops. It's an infinite money hack. And so retail's following along with that notion, thinking, you know what, it's really smart to just buy the tops. Why? Well, Michael Saylor does it. If you're buying with uncollateralized debt, then yes, it is. It's okay. And the debt is in your borrowing rate is determined based upon the price of your equity, and the price of your equity is based upon how much Bitcoin you own. You've found the infinite loop. But we don't have that, right? We can't borrow money infinitely against the price of Bitcoin in our holdings at a leveraged rate.
We got a question here. Does anyone know what MicroStrategy's new offering is all about? I think I haven't had a chance to really dig into it.
It's more of a pure debt mechanism than anything else. It's a preferred convertible that has a coupon to it, right? It's got a 10% coupon to it. So they're going to have to pay. They're going to have to pay that coupon.
Is that the quarterly payment?
Yeah. So there's
yield attached to owning Bitcoin.
Yeah, he's digging in. He's digging in. There's 1,000,001 different ways for banks to offer you collateral and capital, and then you offer it to the public, right? So, again, MicroStrategy is going to be responsible for the payments and the percentages associated with this stuff. But at the same time, they're offering it to the public. The public decides to purchase it, and then Saylor thinks he's got the juice to be able to generate significantly more Bitcoin, which will then move the price higher, which will then give him the opportunity to, capitalize on both of those things and not have to worry about a small, part of the portfolio that they owe some interest on to some folks.
Yeah.
It's an interesting place for us to be associated with Saylor and MicroStrategy because, I'm a big believer in nothing is ever as good as it seems or as bad as it seems. Reality lays somewhere in the middle.
Yeah.
We had a lot of commentary on crypto Twitter yesterday that, the Saylor thing and MicroStrategy is turning into a problem. They're taking on additional debt. This coupon is actually payable. It's different than Strife. Even I saw a post that says, "Wait, is this called perpetual Strife?" That's what this is. But infinite money loop is best case scenario. Can they handle this debt load? And because at some point, some of this debt load they're going to have to manage.
Especially under the new, when you have no cost associated with your debt and it's just redeemable against your your equity. I didn't argue. I think you're totally right, Andrew. I didn't argue with the last structure that he was implementing, but I think the money is running out on that. I don't think he can go as fast as he wants to go. So he's implementing more ways to take money in, but those more ways have risk attached to them in the form of monthly bills. So if you find yourself in a huge downturn in Bitcoin, you can't support those payments because your borrowing capacity is way down. Your traditional business doesn't produce any yield or any real money. So and it goes back to it. The question, second question says, excuse me, can you come back to us again with the market cap versus the liquidity? Here's what I mean by this, and this is a perfect example. A market cap tells you the total number of dollars that entity represents, right, in all of the shares that they've issued. So it's or all the coins that they've issued. So it's like you take XRP's got 100 billion tokens, you multiply it times $2.50, you got $250 billion market cap. Now here's an example. If you have a $250 billion market cap, the larger the allocation percentages are to the whale holders, the more volatile the price will be and the less liquid the market is. Why? Because if Ripple dumps 100% of their supply on the market, it's half of the supply. There's not enough liquidity. So they will be driving the price down to practically nothing before they liquidate their last share. So look at Donald Trump's coin when he launched it. It got up to a $75 billion market cap, but they were only able to extract 200 million in cash out of that 75 billion. So the market couldn't support a lot of extraction because the depth of liquidity wasn't there to support it. Supply works the same way as demand. So when you have a fixed supply and the demand is dynamic like Bitcoin, you can have the inverse of that squeeze. You can have the price go up exponentially quickly because there's not enough there to cover the demand. So as you're working prices, essentially the key thing that you've got to always remember is that you're going to be wrong when you pick one price. You are going to be wrong. The laddering in and the laddering out of your prices is how you de-risk your entry. And that allows you to always have some cash to essentially capitalize on the markets when they're down. But these volatility swings, in my opinion, this is just my opinion, have nothing to do with core value, have nothing to do with what's going on the network in terms of adoption, has nothing to do with how many institutional buyers and corporations and sovereign nations are coming in. It all has to do with liquidating leverage to create supply, because that's the only way you can create it, is getting somebody else to sell it, specifically Bitcoin.
Well, hey, let's go ahead. I definitely want to talk about this DoD thing. So, if you've been in Bitcoin, I guess for a few years, you've heard of software. It was huge when it came out. It was basically Jason Lowery's now Major Jason Lowery, the Space Force. It was his master's thesis, basically saying, "Hey, listen, Bitcoin it can be used as far as protecting the U.S. in turn when we're talking about cyber warfare." And so the idea of this is basically up through time, it's always been kinetic, right? It's always been physical force that nations have used against other nations. And Lowry argues here, hey, listen, I think we're going to be moving from physical to this this energy, this non-kinetic force, right? And so in the way that if we're doing that, then the U.S. needs to be leading in the Bitcoin mining to set this up versus following behind when somebody like China or somebody else gets into it. And so, he came out, he puts his book out, and not too long after, the U.S. military, I guess it was, forced him to take it down, forced Amazon to stop selling it, whatever. Been off the sales for a year or two or whatnot it was, and it's just recently made its way back, to be sold. And so now Lowry goes and changes his profile picture, and somebody asks him, well, what does this mean? And he says, give it about 3 weeks and it'll become clear. And now some other people are lumping that together with other things. Weekly was saying, what's her name? Whatever her name is, Weekly was saying that the DoD is already mining with Bitcoin. They lumped it in with Sailor saying something big is coming and all this.
Yeah, there are some tea leaves out there. Bo Hines, who runs the, I don't know what his title is, but he was brought on as a, whether it's another version of the crypto czar or lieutenant something associated with crypto in the government. He came out and said, the United States should own as much Bitcoin as it possibly can, right? So there are tea leaves out there. Would it be a surprise, if some, entity inside the government is mining Bitcoin for some strategic reason? That wouldn't be a surprise at all. It'd be no different than the surprise, whether it was 18 or 19 or whenever it was, when Fidelity finally spilled the beans that they had been mining Bitcoin since 2015, but just hadn't told anybody. And so, this would be another quote unquote workaround of Congress. Congress having to approve, additional purchases of Bitcoin, with a strategic Bitcoin reserve. This would be a just one workaround. So that wouldn't surprise me at all. Is it going to be a net, major catalyst? Not in the short term, probably.
I'm glad they're focused on it. Listen, mining is important. The network and the support of that is important. The best thing that the government could do, in my opinion, is incentivize people to mine. If you incentivized every human in the United States to mine, we would be the largest contributor to the network. We would control the network. That's where the value lies, is in the control of the network. And if you really want to look at the most vulnerable Achilles heels, if you will, of the Bitcoin network, it's the production of mining equipment. It's all concentrated in China. Like 95% of the ASICs that are produced on the earth are now in China. There are some domestic efforts that are trying to incorporate mining at a much smaller, capacity into household appliances like heaters, refrigerators, those types of things. That is the key. That is the answer to this riddle. And I am glad that if the government is mining, that's they're going to be educated, and that's what they're going to get out of it, is a lot of knowledge about how the United States should contribute to the Bitcoin network as a contribution to society, a contribution to humanity. But I also think that mining is a little bit of a moot point at this stage. Why? Because there's so little left to mine. There's already, I think, a much more bold approach would be if Trump was cutting a deal with Saylor to nationalize their company and do an eminent domain type of an event like he did with the Hunt brothers and silver, and say, listen, between what you have and what we have already and what we're going to buy, we can have, the country could immediately have, 10% of the Bitcoin reserves, of the Bitcoin supply. You do something like that, man, you see the price go to infinity overnight, a god candle like we've never even dreamed of, and you own 10% of it. And like Saylor has said, Saylor has actually said, here is the plan to create $85 trillion and to pay off our national debt with Bitcoin. And he's got that plan. Why wouldn't we? He's been successful in doing way beyond the boundaries of what we thought he could do with MicroStrategy. Why wouldn't we try it at a bigger level? If math works at a small level, it works at a big level,
Yeah. And of course, that's just the production point of it, right? We're just talking in that case about Bitcoin being produced. But the thing I love about Lowry's kind of delving into this is, so when we look at implications of what mining Bitcoin actually means for defense, right? It provides a cyber defense backbone. So, Bitcoin mining then becomes this form of a cyber defense kind of infrastructure, which protects digital assets and data integrity. And so, obviously that's where we're going. We've been going there for decades, right? We're getting everything digital. It becomes, nation states are starting to learn that they can cause more damage if they can affect, for instance, a nation's stock market, or the whatever information that other nation state has. Energy-backed security. So the U.S. could then build these sovereign Bitcoin mining operations, and then they would do it as strategic assets, and that would then be able to convert excess or energy that's kind of stranded out there into defense power. So again, we start taking the waste, all the excess, and we start putting it to work. What's interesting is when we start talking about then monetary power shifts. And so as Bitcoin continues to gain this global adoption, this is that idea I was kind of hinting at earlier, physical military dominance could then potentially erode in favor of this kind of projection of digital power. And so
I think it has to be a balance, because ultimately, if you get lopsided, let's say you're a country who puts all of its efforts into producing as much power and computing capacity as possible. Well, people just roll tanks in there and unplug your computers or take them over. You have to be able to defend your infrastructure as well as build your infrastructure. And, at the end of the day, physical violence, in Texas, I grew up hearing this saying all the time, but it's the great equalizer. Like, it doesn't matter how rich you are, it doesn't matter how big you are, you get in the wrong fight with the wrong guy who has nothing to lose, and you may lose a lot, and the countries that have the least to lose are the ones that are going to target those infrastructure plays to try to, create something for themselves. So I still think military might's going to have to be the backbone.
You still got to have it, yeah.
You got to have it.
No doubt. But I do like this, that this, comes out here and it says, listen, we recognize what's going on. As a matter of fact, you bring up the countries that are lesser able, right? Maybe you've got a smaller country in terms of military might, whatever, but hey, they can come in there and wreak some havoc on your financial markets, on your government information, all this kind of stuff. They can, propaganda, all this stuff. And so it kind of amplifies what they have. And so I don't know, man, me personally, I come from, a military family, my dad, previous generation, stuff like that. And so for me, growing up in the military world, growing up in the military at the time of the Cold War, where we were told, hey, there might be a nuclear, we had to practice if there was a nuclear bomb. What do? Well, you get under your desk. Come on, but it's really great kind of seeing this with the world that we're coming into and how digitized it's becoming. And to see that, especially our military is taking this seriously. Now, are they already doing it? Maybe. They haven't admitted they are yet. Are other agencies probably doing it? Sure. I think you'd be hard pressed not to believe that the CIA, the NSA, probably have their own Bitcoin mining nodes going and doing their thing. I think it'd be silly not to. But to see this idea that we can use this technology, which up until this point everybody has talked about as a monetary gain, right?
Yeah.
And
to
then
secure information.
Yeah, and more recently, as a way to protect yourself against inflation. But then to see it really has some real defensive, areas that we can use it in, and I think it just helps round out what Bitcoin really is. And I think if you're not noticing that, you're really missing out.
Well, and let's talk about what Bitcoin really is. It's very clear. It's a decentralized network. What's a network? A network is something that can send a signal and someone that can receive a signal. That's what a network is. And there's more sophisticated networks where you can have both send receive from both parties. Like if I have a walkie-talkie and you don't have, and you have one, but the microphone's broken, that's one-way signaling. If your microphone works, it's two-way signaling. So Bitcoin is a network that's transmitting information all across the world, and it's doing it without a company that has an electric bill that pays people to manage the network. It's being shouldered at the burden and the cost of the participants. Why? Because the network rewards you with network Chuck E. Cheese tokens called Bitcoin. And guess what? We like Chuck E. Cheese. We like Bitcoin. We like the way in which we can operate those tokens, and we've deemed it to be valuable as it relates to the risk reward of mining that effort. The problem is that miners are getting de-incentivized with every halving that takes place, which forces the price up. In my opinion, that mechanism will not be the driving mechanism for the price of Bitcoin going forward. It's going to be the paper side of it that balances it and stabilizes it and escalates it at a more predictable rate and allows people to build derivative gambling products off of it, essentially, at its core. You cleared your throat like
I thought he was going to.
Yeah, are you coming in with some hammer or something? Don't get so cocky with that hat, buddy.
I had lunch over here. That's why I went dark a couple times, and so I had a little piece of beef in my throat. I had to clear it out. You know what I mean?
Okay.
I didn't have anything meaningful or clairvoyant to say. I'm actually in here reading the comments that that people are saying, and again, the commitment to the look today is really, I just want to thank everybody. I really want to thank everybody. It makes me feel good.
All two of you that said something.
I've got to deal with Tillman's feedback, and it's not always pleasant. So
listen, Fibbo is the one that's complimenting you so much on the hat. Have you seen him? He's one of us. He should. No, that's like me complimenting you, man. It doesn't mean much. Okay. Yeah.
He is a classy and he's a handsome man. Okay.
He is. He's a Tom Cruise. He's
a handsome man. Yes, he's a handsome man. He's also here in the bluegrass, which just adds another touch of class for my man Fibbo. So, listen, I appreciate the positive feedback.
He's a regular Paul Newman, isn't he?
Listen, here at Arch Public, I have to deal with some things, and so I'm happy to get some positive feedback. Oh, we have too much fun. I gotta jump because I gotta get to another meeting. But it's been fun as always, you guys, and thanks for having me. Thanks for having us, Chris. Thanks for having me.
Hey, man, we appreciate you jumping in. Glad you didn't.
Speaking of which, thanks for having us. This show's called Beards and Bitcoin. What's up with the Texas Capital intro? Can we not get some? I mean, this is not an equal opportunity employer over here. What is going on?
Ask and thou shalt receive.
It's been a year, and we don't have a Beards and Bitcoin intro.
You say a year.
It's almost a year into May.
By the way, Arch Public is doing a big time giveaway for the Bitcoin conference. If you want to share that with your folks,
yeah, definitely go ahead, man.
Well, Andrew with hat that we're launching.
Andrew with hat on the Liquid Network. Of all places.
There'll be a
No.
corresponding NFT launch with that,
There's
and
too
the
many-
NFT
there's
has
too many
real world
inside jokes.
utility.
Too many inside jokes. Okay. So no,
Listen, if you own an Andrew with hat token, Andrew will wear your hat for a week and mail it to you so that you have the full experience of a used Andrew hat.
Completely off the rails at this point. So no, we're doing a giveaway for the Bitcoin conference, 2 industry passes. We're going to be sponsors there again at the conference this year.
We're also going to be speaking. If you want to hear another Beards and Bitcoin episode, we're live and in person.
We're going to be speaking at the conference, and so we're doing a giveaway, 2 industry passes. You have to go and download our free Bitcoin algorithm on our website, and you have to follow Arch Public over the next couple of weeks. And the people that download the software and use it for free, and people that follow Try Arch Public are going to get a chance to win those 2 industry passes. So it's a +1 type of activity.
Let them know when the Bitcoin conference.
The Bitcoin conference is the last weekend in May, I think, or last week, May 27th to the 29th.
And for all you XRP nuts out there, fans, I mean, we're going to be giving away 10 XRP. So at $589, that's $5,890 value.
Whoa, holy smokes. I didn't know that was going to be announced.
Hey, where's it going to be this year?
Huh?
Where's the Bitcoin
Vegas.
Vegas, baby. Vegas. So the reason why, it's a pretty significant package. So industry passes, that means you get to go to all 3 days. The first day is industry day, which means there's 10% of the people that are going to be there on the next 2 days. So it's really nice. There's about 4,000 people on the first day, and then there's 30,000 the next 2 days each day. So yeah, it's we want to spend time with people. Not only that, but whoever wins these tickets, they'll also get an invite to the invite-only dinner that we'll have with Arch Public. And
yeah, we did this at the Nashville conference and the one in Miami, and it's a huge hit. It's a lot of fun, fellowship. We go out and have dinner, and Scott came to the Nashville one, Melker, and got to
the dinner. Yeah, so we go out and grab the free Bitcoin algorithm software at archpublic.com and follow us at Try Arch Public, and get in on it. I gotta go.
All right, guys, you heard it. You should do it. I'm gonna do it. So if I win, I'm gonna be like nanny boo boo to the rest of y'all.
There's an asterisk next to it, and it says no hosts or co-hosts or
no KOLs. No KOLs.
I resigned today. Then no. But anyway, guys, So hey, I think that's great. They did this. I believe you guys did this last year when it was in Nashville, didn't you? You did the same.
Yeah, we did, and then we went to a football game in Austin with everybody. We kind of do it once every quarter. It's fun to get together. I know with COVID and everything's going FaceTime, Zoom, and all that stuff. But going and doing something that's a memory maker together, we get a lot of enjoyment out of it. So if you're a Bitcoiner or like to talk about Bitcoin, you'll enjoy the trip.
Beard. Yeah, just want to stroke their beards.
Listen, I'm a germaphobe. If there's any beard stroking, you will be immediately kicked off the trip. And
don't do that then. Anyway, hey, listen, guys. So I think that sounds great, man. Y'all get signed up and do that. Like they said, jump over there, follow them on X, their company, Try Arch Public. That's at Try Arch Public. And then go to their website, archpublic.com, download their Bitcoin. It's the Inks Algo guy.
It's not the Inks Algo. I knew you were about to say that. Oh, we did launch it on your birthday, though.
But yeah, go there and download it and get it going, guys, and try it out. Even if you're a trader, I tell the guys and the gals over at our trading academy that, hey, listen, even if you're trading, you should set aside a bit of Bitcoin that you're always buying, and this is just going to give you an easier way of doing it with it. So I trust these guys. Can't believe I just said that publicly. But if anything bad happens, It's
Good news
completely
is you don't have to
unfair,
trust
okay?
us. We don't accept any deposits. All your money's on Gemini or Kraken or another exchange. You got to go
There
through
you
their
go.
KYC, AML, all that stuff.
All they're doing is giving you the shovels, guys. They're giving you the
We're
shovels.
giving you the excavator. It's up to you to dig the swimming pool in your backyard.
There you go. Man, really enjoyed having y'all again, as always. I look forward to this every week. Make sure you guys join us next week. Same time, same channel. Don't forget Fed decisions coming out, or just came out, I guess. Or is it? No, it's still coming out in what, 45 minutes, right? 2 p.m. Eastern?
Yep.
Yeah. And then you got Powell. Powell's going to talk. Be sure to watch the color of his tie.
Yeah.
But other
As
than
soon
that,
as he opens his mouth, the markets will tank like they always do. So,
well, you know what? They've been pushing up all morning, though. So, again, would we really be surprised? We shouldn't. But hey, make sure y'all watching that. If you don't want to deal with the volatility, make sure you're out of the market here for the next couple hours. Likely knee-jerk reaction. Social mood determines the real trend of the markets, just so you guys know.
and just remember, this is something that somebody taught me a while back, and it helped me a lot. Let's say an announcement comes out that's good, that's positive, bullish news for the markets. Oh, there's a lot of people on the other side of that trade that have to cover their positions, which typically produces a counter trend to the primary trend. So don't get too faked out or involved at the decision from a margin perspective, because even if you're right, you can get wicked out. So just remember that there's a lot of volatility when these announcements come out, and you almost want to wait until there's a clear directional move versus trying to play the news itself. So just a little tidbit of advice.
100%. I agree completely. All right, guys. I'll be back on Friday at 11 a.m. Central, 12 p.m. Eastern with the market breakdown there. Other than that, you guys trade safe out there. Check them out at archpublic.com. Come check us out at TexasWestCapital.com. We both love to have you guys there. We're both here to help you guys do the best with the markets and to make money. So take care. Be safe. Thanks a lot for joining in, man.
See you guys. See you, Chris.
Hey, everybody take care.